Hey everyone, welcome back to Corporate Decoder. Today the FPF just filed its semi-annual shareholder report, and I am seeing some interesting moves in the preferred and income fund space. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report gives us a peek into how the fund navigated the markets over the last 6 months, and we will dive into the financials and risks. Let's start with how the fund performed. For the 6 months ending the 30th of April 2026, the fund's net asset value returned 1.57%. It did underperform its blended benchmark, which returned 1.74% for the same period. The report mentions leverage detracted about 13 basis points from performance, which is a common drag when interest rates are unpredictable or when the fund uses borrowed money to try and boost returns. Looking at the fund's statistics, the common share price was $18.42, while the net asset value, or NAV, was $19.46. This means the shares were trading at about a 5.34% discount to their NAV. This is pretty common for closed-end funds, and it means you could potentially buy into the fund at a price lower than the actual value of its underlying investments. The fund also maintained a solid distribution rate, around 8.96% on the share price. The fund's portfolio is heavily concentrated in the banking sector, making up over 47% of its investments. Other significant holdings are in insurance at 14.2% and electric utilities at 8.8%. This concentration means that the fund's performance will be closely tied to the health of these specific industries. In terms of its biggest investments, you see major banks like Bank of America Corp. And Barclays PLC among the top holdings. Land O'Lakes Inc. is also a significant investment. This focus on large, established financial institutions suggests a strategy aiming for stability and income. The market recap paints a picture of a volatile 6 months. Geopolitical events like issues in the Strait of Hormuz caused energy prices to spike and increased inflation fears. This led to higher interest rates globally and market volatility. However, the preferred and hybrid securities market showed resilience, recovering nicely in April. The report highlights contingent convertible capital securities and non-investment grade $1,000 par securities as strong performers in this environment. Diving into the actual investments, the fund holds a vast array of preferred and capital securities. For example, under the $25 par preferred securities section, we see holdings in Ford Motor Company. Further down, under capital preferred securities, there is a significant exposure to banks like Banco Santander S.A. and Bank of America Corp. The fund also holds substantial investments in electric utilities like Nextra Energy Capital Holdings and insurance companies such as Hartford Insurance Group. The sheer volume of these holdings shows the fund's broad reach within the preferred and capital securities market. Now let's look at the fund's balance sheet. As of the 30th of April 2026, the fund's investments were valued at over $1.8 billion. On the liability side, the fund has a significant outstanding loan over $552 million and a reverse repurchase agreement of $100 million. These borrowings are a form of leverage which can amplify both gains and losses. The net assets of the fund stood at approximately $1.18 billion. Looking at the income statement for the 6 months ended the 30th of April 2026, the fund generated investment income of over $62 million, mainly from interest and dividends. However, the expenses were also substantial, over $23 million, with a large portion going towards interest and fees on its loan and reverse repurchase agreement. Net investment income was over $39 million. The fund also experienced a net realized and unrealized loss of over $23 million, primarily from a decrease in the value of its investments. Over the 6 months, the fund's net assets decreased by about $34.5 million. This was mainly due to distributions paid to shareholders, which amounted to over $50 million. Despite the decrease, the fund's operations did contribute a positive increase of over $15 million. The statement of cash flows shows that the fund provided over $47 million from operating activities. However, financing activities, largely driven by distributions to shareholders and net borrowing activity, resulted in a cash outflow of over $50 million. This shows the fund is actively distributing income to its shareholders. The financial highlights give us a snapshot of per share performance over several years. For the 6 months ending the 30th of April 2026, the net asset value per S-share was $19.46. The total return based on net asset value was 1.57%. The fund's expense ratio, a measure of how much it costs to run the fund, was 4.00%. This is on the higher side, influenced by the interest expenses related to its borrowings. Now, let's touch on some of the risks mentioned. The fund invests in contingent convertible securities, or COCOs. These are complex instruments often issued by banks that can convert into equity or have their principal written down if certain triggers are hit. This makes them riskier, especially in times of financial stress. as investors could lose their entire investment. The report also flags current market conditions. It mentions the impact of rising interest rates, ongoing geopolitical tensions in the Middle East, and potential regulatory changes in the financial sector. These factors can lead to market volatility and affect the fund's investments. The mention of the upcoming presidential election and its potential impact on trade and economic policy further adds to the uncertainty. A significant risk highlighted is cybersecurity. The fund, like many financial institutions, is vulnerable to breaches that could lead to data loss, operational disruptions, and financial penalties. This risk extends to the companies the fund invests in and its third-party service providers, showing the interconnectedness of digital security in today's market. The fund's use of leverage is also a key risk. While it can boost returns, it also magnifies losses. If the income from leverage investments doesn't cover the cost of borrowing, it can hurt shareholder returns. This is particularly relevant given the fund's significant borrowings mentioned earlier. Given the fund's heavy concentration in financials, the report explicitly calls out the risks associated with this sector. This includes sensitivity to interest rate changes, loan defaults, and stringent government regulations. Any downturn in the banking or insurance industries could have an outsized impact on the fund's performance. Finally, there is valuation risk. Unlike stocks traded on major exchanges, some preferred and debt securities trade in over, the counter markets where pricing information can be less transparent and more complex. This can lead to challenges in accurately valuing these assets, especially during market turmoil. In conclusion, the First Trust Intermediate Duration Preferred and Income Fund operates in a complex market environment with significant leverage and concentration in the financial sector. While the fund aims to provide income, the risks associated with its investment strategy, particularly those tied to market conditions, leverage, and sector concentration, are considerable. The fund's large position in financial services, coupled with its use of leverage, means its performance will be highly sensitive to economic and interest rate shifts. The primary risk I am watching is how effectively the fund navigates current market volatility and interest rate uncertainty given its leveraged position and industry concentration. My biggest concern is the potential for magnified losses in a severe downturn, given the inherent risks in preferred and contingent convertible securities. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.